Hold on, guys. So don't click off this video. I know I'm young, but I've done pretty well for myself. So let me share some of my qualifications to even talk about this video. Um, I'm currently 17. I run a macro quant fund with over $500,000 or $500,000, and I've been consistently doing 10 to 20% return every single month for the past 8 months, very consistently, making over around $200,000 in the past 8 months also. So I feel like my qualifications are pretty big compared to even some of the other people on YouTube. So please just take me seriously. I know that I'm young, but I literally work my butt off every single day for this stuff. So yes, thank you for watching. Let's get into the video. All right, so first thing that you're going to want to do, the best tips for trading is basically you have to make a strategy, and you have to be able to backtest that strategy, because all trading is gambling, but with statistics. The you're counting cards with the the stock market. All right, I made a bunch of algorithms, all right, and that use computer learning to update themselves on every single day, to update the strategies every single day to stay on top of it. And I use TradingView to test and backtest my strategies, but I have a bunch of servers in my basement that run the computer learning system. But you don't need a computer learning system. The only reason why I use a computer learning system is because I run a macro quant fund. When I was just doing it alone, um, I mean, when I was just doing it alone, I was just trading myself. I remember my first real trade. I if you guys remember DGAS, I put a trade. I, I put basically, sorry, let me just, I put a trade on DGAS, and I made 24% just like that within a week and a half, and my trade went perfectly. But that's only because I understood the fundamentals of why it happened, and I did a whole lot of research in backtesting my strategy using this notebook right here. If I look into it, it's all about market risk, all right? So let me tell you fundamental facts of trading. Number one, if you're above 50% accurate and you have a profit factor above 2 and a Sharpe ratio above 0.5, you're statistically likely to make money. You have about a 70% chance of making money every single time you enter a trade, even though the accuracy is lower, but you have a 70% chance of basically winning on a larger time frame. So if you take that first 100 trades, all right, and you have if you have a percent accuracy above 50%, profit factor above 2, and a Sharpe ratio above 0.5. After 100 trades, you're 70% likely to be up. And I know that with that 100 trades may seem like a long time, but I'm going to show you how to backtest it. All right. Another fundamental rule: your risk has to be more. Your reward has to be more than your risk. And I know that you guys I've been talking to you guys about like the risk to reward strategy a whole lot, so that like if you have a profit, if you're risking 1%, so that means you have a stop loss of 1% and you have a take profit of 2%. Statistically, if you're 50% accurate, which you should be, because if you're flipping a coin, you're 50% accurate anyway. All right. If you do that 100 times, you're statistically likely to make money, so above 50%. And who says you can't? So I know that this may seem like luck, but if you really develop your strategy and you really get into it, there's really no limit to what you cannot make. So I've done a ton of research on this strategy right here. Sorry, let me just size my face down a little bit. So this is one of my favorite trading view strategies. It is shorting the S&P 500 on, if I can show you this, on SPXL. All right, so basically, I know that it took a losing trade today, but you can see its consistent performance returns in the past few months, right? And since its market, this white line right here, has been going down, that's what you want to look at. But these are the main statistics that you want to look at right here. accuracy and profit factor, because if it doesn't make a whole lot of money, you can use leverage and pump it up almost double, and you would make double the percentage. So don't look at this number right here. It's not what you should be worrying about. These two numbers are your guide to success. All right. I'm not even joking. Before, I was maybe 30% accurate on my trades, and I know that that seems like garbage, but I know. I know. So I know. Stick to your trades. Don't worry about this number. Only worry about these two numbers, and if you go in the performance summary, this number right here. So I have a Sharpe ratio of 1.25, a profit factor of 2.18, and an accuracy of about 60%. With that, I can make consistent returns. Oh yeah, and also I have 130 back-tested trades, so I have a large data set to compare my trades to. Now, some people will say this is a small data set, but the market changes so fast on the 5-minute chart, it's not even funny. So a smaller a smaller um, a smaller amount of a data set will do actually better than a larger data set, but it won't do better than the all-time largest data set. But I can't have access to that because it's almost impossible to find that data and reprogram my algorithms for it. So um, I'm not going to try to do that. So I'm just going to take the easy way out and do what statistically is plausible for me. Right. Another thing is, so basically, I'm going to explain this strategy to you guys. This is a MACD strategy. I know you guys don't believe me because that, of course, but let me just move my head. All right. So if I come up here, you can see that this is my MACD 3.0 short 5-minute SPXL. May seem a bit foreign to you guys, but I have basically a bunch of different indicators in here. So first thing is my MACD. All right, I have a fast length, I have a slow length, and then I have signal smoothing, and then my oscillator types and my signal type. All right. So as you can see, this is set to 1. These numbers are, well, mathematically calculated by my computer learning system, but I'm not very worried about that. So I'm just going to keep those the same. But I recommend tuning. Go find my tuning video if you're going to do it by hand. All right, I basically have a trend, so I'm going to explain the strategy. So if it is above this, if it is below, because it's shorting, this purple line right here, all right? If it's below this purple line, which means that there's a lot of volume heading down or an up or in a single direction, it'll be able to basically capture that. If there's not a whole lot of volume and a signal goes off, it's not going to buy, all right? This right here is so it doesn't trade above when it's not in the direction. Another real fundamental rule of trading is it needs to be trending in the direction that you're wanting. So I have my don't buy below length. So this is a 197 SMA that will sell on the SMA cross. So this line right here, all right, if it goes above that, it's going to start going long, but it's going to start going long. But if it's below that, that means it's with the trend and it's statistically more likely to make money than anything. So have a length of 197, that's about it, all right? MACD take profit. So if the MACD lines cross the 0.25 mark on the MACD, it'll sell, all right? Then this is the real magic right here. This will save my strategy. I can take everything else off and just show you guys that. So I have a take profit of 3% and a stop loss of 1.49. So this is just about 2 because 15 plus 15 equals 30. So there we go. I don't really use a trailing stop loss because on TradingView they're really glitched out and they kind of suck. So don't try to use that. I mean, you can, but you have to make your own. Don't use TradingView standalone. This is a custom-made indicator, so don't worry about that. Volume, so I kind of turned this off, but shoot, it's looking like I shouldn't. But basically, when it reaches a volume of negative 180,000, it will sell. And I can change the value on that too. All right, smart RSI tools. So basically, this is just an RSI. So whenever it reaches the 0.6 line on the RSI, which is running a 27 length, all right, it will sell because it'll take profit because it's saying that it's too overvalued or it's too undervalued and you need to cut your losses or you take your profits. All right, your EMA, so this is just a simple EMA cross sell. So you can see what this does. So this green line is the EMA sell, and you can see that it's sold up here, and I know it seems like for a loss, but statistically it makes money. So I like money, so I'm not going to complain. But as you can see, it does pretty well for itself, right? But that leads me into number 3, which is use known trading strategies, all right? A simple MACD strategy with 180-day SMA cross will almost destroy anything. You'll beat the market. It's not even a joke at this point. I mean, all retail traders say that, like, oh, they have their own strategy, and you probably should make one. I'm not saying don't make your own, because there's real mathematicians out there that made the MACD, and gamblers use the used the risk reward strategy. So if you put both of those together, and then if you only trade when it's in your direction, you're gonna make money. It doesn't even matter. I'm actually considering about making a script for you guys about that, but just use known trading strategies. Also, don't let it get in your head, and that's pretty much the full video. So see you guys later. Hopefully this video was very, very informational to you. If I was in your shoes, which I was at your point about 4 years ago, I definitely would feel that this video has helped. All right, thank you. Bye-bye.